The Canadian government has announced a $6 billion aid package to support businesses struggling with the economic impact of U.S. tariffs imposed by President Donald Trump. This initiative aims to provide financial relief, preserve jobs, and help Canadian industries reduce their reliance on the U.S. market. With additional provincial-level funding, Canada is making a strong effort to shield its economy from the fallout of an escalating trade war. Key elements of Canada's business support plan. The aid package is structured to mitigate immediate financial strain and ensure businesses can adjust to the new trade environment. The following key measures have been introduced. 1. Expanding trade beyond the U.S. A significant portion of the $6 billion package will assist exporters in finding new international markets beyond the United States. With Canada's trade heavily reliant on the U.S., diversifying exports is crucial to ensuring long-term economic resilience. The government will provide financial incentives to businesses exploring trade opportunities in Europe, Asia, and Latin America. Programs will help small and medium-sized enterprises, SMEs, navigate regulatory requirements in new markets and develop trade partnerships. $2 billion for agricultural businesses. The agricultural sector has been particularly affected by tariffs, especially in dairy, grain, and livestock exports. To counteract these challenges, the government is investing $1 billion to provide direct financial aid to farmers facing revenue losses, subsidies for agricultural businesses expanding into non-U.S. markets, research and development grants to enhance production efficiency and sustainability. Third, job protection and employment insurance support. Recognizing the risk of mass layoffs due to tariffs, the government has committed to covering employment insurance, EI costs, for businesses that would otherwise have to lay off workers. This will ensure that companies can retain employees while adjusting to trade disruptions. Businesses will receive government-backed wage subsidies to prevent job losses. The work-sharing program, which allows employees to work reduced hours while receiving EI benefits, will be expanded to support impacted industries. Employment and Labor Minister Stephen McKinnon emphasized that these measures will help businesses weather the economic storm. These new measures will provide stability at a time of great unrest and uncertainty, ensuring that more workers keep their jobs and more businesses remain operational. Provinces stepping up with additional support. Several provincial governments have also announced additional funding to protect local industries. These include Quebec, allocating $50 million for affected businesses. Nova Scotia, announcing a $200 million support package to aid local industries and protect jobs. British Columbia, factoring in billions of dollars in emergency economic measures to mitigate trade war consequences. Alberta, preparing its own retaliatory response and economic assistance plan. Newfoundland and Labrador, strongly opposing U.S. tariffs and committing to financial and legislative support for impacted businesses. Canada's strategy, retaliation and diplomacy. Despite a partial rollback of some U.S. tariffs, the Canadian government remains firm in its retaliatory approach. Canada will maintain $30 billion in counter tariffs on U.S. goods while continuing negotiations to resolve the dispute. Bipartisan political support for retaliation. Conservative leader Pierre Poilievre criticized Trump's tariffs and called for an end to trade uncertainty. The New Democratic Party, NDP, has pushed for additional emergency worker protections ahead of the upcoming federal election. Finance Minister Dominic LeBlanc is reportedly in constant communication with U.S. Commerce Secretary Howard Lutnick, seeking a diplomatic resolution while ensuring Canada remains economically protected. Conclusion: strengthening Canada's economic resilience. With financial support, job protection, and trade diversification, Canada is taking bold steps to protect its economy from U.S. trade aggression. The $6 billion aid package, along with strong provincial initiatives, demonstrates Canada's commitment to keeping businesses afloat, retaining jobs, and reducing reliance on the U.S. market. As the trade war continues, Canada's strategy of firm retaliation, proactive economic relief, and aggressive market expansion may not only help mitigate current damages, but also position the country for greater long-term economic independence. The coming months will reveal whether these efforts are enough to offset the challenges posed by the ongoing trade tensions with the U.S.